The markets are at all-time highs. It's great for investors like you and me. But then, all-time high comes with its own set of questions. Should I be buying now? Should I be selling now? Should I be holding now? While this is going to be a question for a long period of time, primarily because India as a market is going to make newer all-time highs. But here are the 5 things you should essentially do as the market keeps going up and up and up. The first and the most important thing that you immediately should do is figure out if you need any money that you have invested in equity in the next 12 to 18 months. I know that generally you invest in equity for a period of 3 to 4 to 5 years, but then there may be time when that goal that you wanted to achieve in the next 3 to 5 years is already close by, and hence you should take this opportunity to move away from those investments, exit those investments, and take the money back and put that into debt, the money that you may need in the next 18 to 24 months. So please redeem those money at this point in time. The second thing, which is very difficult to implement because it has got its own set of psychological impact, is exiting assets or stocks or funds that are not doing well in spite of market rallying for the last 3 years continuously. Yes, I'm talking about those dud assets that are not doing well at all in your portfolio, but you don't have the courage to actually exit those because they are showing losses in your portfolio. Believe me, exiting dud assets is a lot more beneficial than holding on to them so that they come back to their original price, primarily because good assets will grow a lot faster than dud assets. So please, my request is please exit those assets that you think has not performed well or is never going to perform well in the future. Third thing that you should keep in mind is you should take this opportunity to rebalance your portfolio a little bit. There is nothing wrong in rebalance. You should always move from one asset to the other and invest into those assets that offer better value. I always do that. It could be equity to debt, it could be equity to real estate, it could be equity to commodities, it could be equity to any other asset that primarily can offer you better risk-adjusted return and better value for the risk that you're taking. So here, at this moment, go and analyze your portfolio or ask your financial advisor saying, should I be invested or is there better alternative to these investments? Go ahead and do those rebalances if it warrants you to do so. Fourth point, which we all like, is to stay invested. Yes, you should continue to stay invested in these market conditions even though they are at all-time high, primarily because the markets in general, after hitting all-time highs, goes on to hit another all-time high 80% of the times. Yes, 80% of the times in a span of 1 year. So you should take this opportunity to stay the course if you don't need the money and if your asset is not really overvalued. And finally, the fifth and the most important point is please do understand and do an assessment of the risk that your portfolio is right now at. For all you know, you have a lot of small cap stocks which are very, very high on risk. You should make sure that you take few efforts to reduce the risk in your portfolio. Yes, I understand it is lucrative for you to hold on to small caps, but in general, mid and small caps have the tendency to give you great returns, but also pull down very, very fast. Therefore, you should take this opportunity to look at your portfolio primarily with the focus of risk and the return it can offer and change the course if it requires. I really hope you like these 5 points that I mentioned in this video. Thank you for watching. Happy investing.